All right. A few people had commented on the fact that they were struggling with transaction analysis. I think it was problem 14 in the homework assignment for chapter 1. So they had asked if I would work on a problem. So I chose one from the textbook. If you would, before you continue on, I would put this on pause and then access your textbook, either your loose leaf edition that you have, or if you're using it online, open up your e-text and you'll want to go to page 35, which is in chapter 1, and it is problem 1-9A, which is at the bottom of page 35. So what I've done here is I've opened up Excel and I've created a template for myself. Of course, you don't need to do that because you'll be working in Connect, but you won't always have Connect to fall back on. So sometimes it's helpful for practice purposes if you want to work on problems out of the textbook yourself and check with me on the answers. That is perfectly fine. If you would like to do that as extra practice for yourself, yeah, I won't count it for any points, but it might help you in terms of learning the material, which to me is the bottom line. Doesn't matter if it takes you additional work to learn the material. That is what we're here for, is to learn. So I would encourage you to do that if you think it would be to your benefit. Plus, you get used to working in Excel. I find that sometimes when I'm building these templates, I often ask myself, how can I do this a little easier? And that forces me to learn a few more of the kind of the tricks or the options that are available within Excel itself to try to make things go quicker. So here I've organized myself. I've got formulas where it says balance. Each row is a formula. And so this way it keeps a running total, because as you'll see, that's one of the pieces of instruction that's given to us in this problem. So there are two requirements in this particular problem. The first one is create the table similar to the one in Exhibit 1-1.9, which we've done here in Excel. Then it says use additions and subtractions within the table to show the dollar effects of each transaction on individual items of the accounting equation and show new balances after each transaction. That explains why I have so many balance lines, because they want you to create a balance after every transaction. Then it says determine the company's net income. That's requirement number 2, which we should be able to easily do that once we get to the bottom. If we've done everything right, we should be able to come up with what the net income is. And remember, net income is just revenues minus expenses, and we'll have that down at the end of the worksheet that we have there under equity. We've got revenues and expenses. So let's begin here. We're going to take a look at the first transaction, and this is Sanyu Sony started a new business and completed these transactions during December. And so the first one is they transferred $65,000 cash from a personal savings account to a checking account in the name of Sony Electric in exchange for its common stock. So this entry here is a capitalization entry. Okay, that means we're getting the business started. So we're putting in $65,000 in cash. Okay. Oh, that's... Okay, I just had you check on one thing there. So we've entered in the $65,000 in cash here, and then we'll come down to common stock, and we will put $65,000 here. Boom. And so remember that liabilities plus equity has to equal assets. And so we do. That entry is in balance at $65,000. Then on December 2nd, what happens on December 2nd? The company rented office space and paid $1,000 cash for the December rent. And so that paying $1,000, well, that means that they have had a reduction in cash. And so I enter that in as a negative number because we want it to show a reduction in cash. And then we also have negative $1,000 here because we want to show it, right, as a reduction in the equity side. Now that reduction, just so that you know, I put the dividends and expenses in parentheses, and that's because we want them to offset. Equity, remember, is increased when we increase the common stock, and it's increased by revenues. It decreases when we pay out dividends, and it decreases when we recognize expenses. And so that's why I've got them in there as negative numbers. Okay? Let's take a look at the third transaction. The third transaction says the company purchased $13,000 of electrical equipment by paying $4,800 cash and agreeing to pay the $8,200 balance in 30 days. So because they've agreed to pay it in 30 days, that's going to be in accounts payable. It's not any kind of a long-term loan or note, it's just an account payable. And so what we have here is we have an increase in what? Well, we've got an increase in, we'll have to call it office equipment for okay, so we're back. Just to recap where we're at, and I'll explain to you why I had to pause and take a little break. We posted the first transaction, okay, December 1st. We had the cash infusion. So the owner of the business contributed $65,000 in cash to the business in exchange for common stock. And so the value of the common stock is based on the amount of cash that was contributed. So $65,000 in cash translates to $65,000 in common stock. The second transaction that occurred was to they wanted to rent some office space. So they rented some office space, and so they had a payment that they made for December. So they made that up front. They paid $1,000. So that showed up as a reduction in cash. Okay. And then within that, we scroll down and we show $1,000 in expenses for the rent expense. Now we're not differentiating the different types of expenses here. It's all going to end up in just the one column expense. I'm going to try to condense this a little bit just so that we can try to get all the columns in here. And then let me shrink this up a little bit. There we go. Okay, now I can see the whole thing on the screen. So the reason why I took a pause on here is because sometimes you have to look at the problem, carefully. When you're setting up a company, you're going to set up something called a chart of accounts, and it's going to include all the accounts that you think you're going to need for that business. And of course, your accounting system will allow you to add new accounts as you need them. In a setup like this, where you're working on a problem, sometimes it's good to just kind of look through and see what accounts are going to be used. There's only so many transactions here, so you can kind of scan through it and see what's being done here. And so you can kind of look and say, okay, what am I going to need? And so I modified the account structure a little bit here just to get a better recording. Now I haven't looked at the answer key for this problem, so I don't know if they necessarily did that with this problem or not, but I think it's a good practice to get into. So at any rate, so that's why I had to pause it here. So I'm going to move on now to the third transaction where I talked about it. I think I started to read it before. The company purchased $13,000 of electrical equipment by paying $4,800 cash and agreeing to pay the $8,200 balance in 30 days. And so this occurred on the 3rd. And so on the 3rd, we have a cash withdrawal of $4,800, okay? So, and then we have electrical equipment of $13,000, okay? And then over on the liability side of the house, we have $8,200, okay? And so, and when you look at it, if you look at this transaction, the transaction's in balance. That's important. And if you ever want to know that, What you could do is if you were unsure, you could create a little check for yourself here, because you want to make sure that each row nets out to 0. All of these should be 0 if you check this out here. I'm pretty confident in my mathematical and accounting skills here, so I'm going to trust it. But if you're not, then just put a column out here, just leave this column out here and just put in a formula that sums the row, and it should come out to 0 when it's all done. You're just subtracting, you're taking your assets, and then you are subtracting the liabilities in the equity. Okay? So, what happened on December 5th? That's our 4th transaction. The company purchased office supplies by paying $800 in cash. So again, we hit the cash account. Something useful to note here, the cash account, this is where the statement of cash flows comes in. Basically, everything that runs through the cash account ends up showing up in the statement of cash flows. Now, on the balance sheet, you only see what the balance of cash is. But if you want to actually see all the action or the activity that occurred, you'd have to look, one, at the details in the general ledger for the cash account. The other thing you can do is you can also look and get a good summary for the period by looking at the statement of cash flows, particularly if it was set up on the direct method. I find the direct method is better for transparency purposes. The indirect method is easier to prepare, but the direct method to me is more useful. And so we're office supplies, $800. And so we have $800 of office supplies. So again, what's happened in this transaction? Nothing happened on the other side of the accounting equation. Remember, it's assets on one side, liabilities and equity on the other side. Both of the sides, both parts of this transaction occurred on the asset side of the equation. So you had a decrease in cash and an increase in office supplies, which is perfectly fine because it still leaves everything in balance. Okay? So let's move on to the next transaction, which is December 6th. The company completed electrical work and immediately collected $1,200 cash for these services. So then what happened here? Well, they didn't have to bill anything, so they don't have an accounts receivable, but they did receive payment of $1,200. So they had an increase of $1,200. So here's some cash coming into the business, which is a good thing because you want cash coming into your business. The other side of this is they recognize revenue of $1,200 for some work that they did. Okay? So that's the next transaction. Now we go to December 8th. Again, I pre-populated my dates here based on this problem. So that's why I tried to make it a little simpler, or we would have been here watching me format a spreadsheet, and I don't think that would have been fun for anybody. Although if you have any questions about formatting a spreadsheet, you can always ask me. I think you guys got enough of that when you took that BUSA course, that computer class that you have to take. I guess it's a BUSA course. All right, December 8th, the company purchased $2,530 of office equipment on credit. Okay, so now we've got office equipment. Okay, so $2,530. Oops, I missed something. Yeah, $2,530. So this is December 8th. So $2,530 office equipment. Boom. Now where does the other part of it go? We're going to put it into a payable. Okay, so we're going to increase our payable $2,530. Okay, our accounting equation is still in balance. We're in good shape. Again, if you don't trust yourself, you can always put that column at the end, just to kind of prove it to you if you want. I can go out here and show you exactly what I did. What you could do is you can just type in equals sum, boom, and then you can drag across, and you should be able to, we'll have to modify this equation. Bad idea on my part. Happens. Not everything I do makes sense. So what we want to do is we want to have the accounting equation in here. So what we're going to do is we're going to do something a little different. We're going to put in our own equation here. We're going to have to put in sum and we want to sum all. Oops, there, sum. And we want to sum those, all right? And then minus sum. This is where you can get kind of fancy in building formulas. There you go. So we should have enough parentheses to get this done. And if I did this right, there we go. It zeroes out. So there it goes. So you can set up a formula built in. That is the accounting equation in this particular spreadsheet. It's just done in Excel language instead. So here's your assets minus liabilities and equity. The result should be 0, which it is. Okay, and so you could use that in this entire column if you wanted to, just to kind of keep yourself square. All right, let's move on to the next part here. This is going to be December 15th. So if you're following along in the book, the company completed electrical work on credit in the amount of $5,000. Since they completed electrical work, and it says on credit, that means that somebody owes them money. So somebody owes them $5,000. Okay, and hopefully they'll pay it up. They don't want Rocco and Bruno coming to do the collections on them. That's a New York joke. I'm originally from New York. We had the mafia up there. All right, and so we get to recognize $5,000 in revenue. Boom. Okay, so we're in balance. We're good. So next we move to the next transaction, and it is December 18th. It says the company purchased $350 of office supplies on credit. So what did we do? We have office supplies, $350. And they purchased it on credit, so that means they have a payable. Okay. What happened on December 20th, which is our next transaction? The company paid $2,530 cash for the office equipment purchased on December 8th. So what they've done here is they settled a liability. So then we're going to go minus 2530. So we've got our reduction in cash. And of course, that was a payable. We can see it right up here. We can see it in row G13. So we come down to G19, and we're going to decrease by that amount our payables. And we're in balance, right? December 24th, Christmas Eve, for those of us that celebrate Christmas. The company billed a client $900 for electrical work completed. The balance is due in 30 days. See, they can word things a lot of different ways. Notice they worded it that way. Then they said the company completed electrical work on credit in the amount of $5,000. The gist is that if they were paid, it would say they were paid. In some way, shape, or form, it would say they were paid. So you just have to read these things and interpret them carefully, okay? And you'll get used to it after a while. There's no rhyme or reason to this other than the fact that if it was if they did not receive cash and they did something for somebody, then it is a receivable. If they received cash, then it should impact the cash account. Okay, so they billed $900. So for December 24th, we show an increase in the receivable for $900, and then we come across to revenue. $900. Okay. When these disappear, I hope you guys know that you can do the freeze. You can freeze the formatting here. Okay. There we go, view. And we want to freeze panes. Boom. And so now we've got frozen panes here. And this way you can always see your headers. I'm sure most of you know that already. Plus, it also freezes the first column as well, because it's going to freeze basically whatever is above or to the left of where your cursor happens to be. That's what's going to get frozen. Okay. So let's go. They take a Christmas break. They come back on the 28th, and then the company received $5,000 cash for the work completed on December 15th. So we received cash of $5,000, and so that means we reduce the accounts receivable by $5,000. Again, this doesn't affect revenue anymore because we already recognized that revenue on December 15th. Now we're just closing out the receivable or reducing the receivable and recognizing the cash that's coming into the business. So then on the 29th of December, the company paid the assistant's salary of $1,400 cash for this month. And so they said paid, so that's going to be minus $1,400, and that is an expense. So minus $1,400 in the expense column. Okay. Then on December 30th, it says the company paid $540 cash for this month's utility bill. So they paid cash, $540 for utility, whoops, which is an expense, minus $540. Okay. And then finally on December 31st, the company paid $950 cash in dividends to the owner. So they paid dividends to the owner. So that's going to be $950 in cash that they paid to the owner. And then we're going to show $950 as dividend. Boom. And so all of the transactions have been recorded. And so now the second part of the problem says determine the company's net income. Well, we can do that right here, or we can do it right here, wherever you want. If you use this column here for this purpose, and again, what you can do, if you want to, you can kind of drag that down. It'll all be 0, right? You can copy, paste the formula here. Paste for it, and number format, because we want the same. And then drag down, bada bing. So there, that's what it would look like for you if you were to have this as a way to check. It should all be zeros across the bottom. And then what we can do is we can say net income here is going to equal, right, our revenues minus expenses. And if you want to, you can put this in parentheses. Oops, put an equal sign there so they know it's a formula. Hey, formulas always start with an equal sign. And so let's see. We want it to be plus. And again, I always like to highlight things. So I'm going to put a nice thick border around it. All right, let's see. Okay, I had to take a quick break there for a second. So we calculated our net income at $4,160, which is just the difference between our revenues, $7,100, and our expenses of $2,940. So for this exercise, this took me about 25 minutes to kind of walk through. I would have done it much quicker if I was just using it myself. This is considered a hard problem for this textbook. I checked the rating on it, and it does. They rate them as easy, moderate, and difficult or hard. And this is considered a hard problem. So What I'm going to do next is probably tomorrow. I will post a second part of this recording where I will walk through and prepare some financial statements for you and then perform some basic financial statement analysis. Okay? And so again, what you can do here is I'm going to name this. I'm going to call this my ledger. Okay, so this way I know that that's what it is, because as I work on this problem, I'll create additional worksheets and I will name them appropriately. That is always a good practice to get involved with. Okay, so again, if you have any questions, you can always email me. I'm going to post this online so you can kind of follow along with it.